This is the Economic Club of Florida, a distinguished platform for discussion of the major national issues of the day. On today's program, Florida Insurance Commissioner Michael Yaworsky on the state's topsy-turvy property insurance market.
We will do every single thing that we legally can to try and keep an insurer in this marketplace, providing service for their customers, making sure that they're paying claims when they're due. And it's going to be a very difficult time for a little bit longer before we can get to a place, hopefully, where we're past a lot of the past 7 years.
Good day and welcome to the 567th in our series of Distinguished Speaker programs. I'm Harvey Bennett for the Economic Club of Florida. When we think of Florida, one of the first things that come to mind is the weather. Not only the abundant sunshine and warmth, but the hurricanes. Hurricane Ian made landfall just this past September of 2022 and was the costliest in state history, causing an estimated $109.5 billion in damage in Florida, including insured and uninsured losses. And for the state's property insurance market, it's just the latest in a series of challenges, though. We're honored to have with us today Florida Insurance Commissioner Michael Yaworsky, whose responsibilities include overseeing the health of Florida's insurance market and regulation of the insurance companies that participate within it. Commissioner, welcome.
Thank you very much. I'm honored to be here today.
Well, I know that you have been on the job about 3 months, but you have been with the Office of Insurance Regulation for several years before that. Let's talk about those challenges because they do go beyond the natural catastrophes. We've had a marketplace with some historic challenges, some big underwriting losses for insurance companies. And in the meantime, we've seen multiple double-digit rate increases on the homeowners insurance policies. What's driving all this?
That's a great question. It's really a combination of three factors, which is the cost of reinsurance, the overall natural catastrophe events that we've had in the state for the last several years, and something that is generally called social inflation, which carries everything from abusive practices within the litigation environment to vendors that aren't acting in the best interests of the consumers overall. And so we've seen those three events over the course of the past 7 years, combine together and accelerate each other, causing a unprecedented level of adverse loss reserve development, which is basically a fancy way of saying the cost to insure homes has exceeded all expectations that were presented before it in rate making.
Right, and we've had some insurance company insolvencies because of that. So in other words, the cost of claims are greater than what they have planned for.
That's exactly correct.
Gotcha. Well, in a few minutes, you're going to talk to the club about the decade ahead in the Florida insurance marketplace. And being a relatively new insurance commissioner, you kind of have a clean slate to address this. Without stealing your speech, can you give us a preview of what you see as the decade ahead?
Sure. And so one of the things that, as I was working on putting this presentation together, it's important that a good bit of it will be discussing not only the future but the past, because we need to see a bit of where we've been over the course of the past several years, really in some ways going back decades to the immediate aftermath of Hurricane Andrew, in order to see where this market is going in the future. And so I think it's important to keep in mind that this is the most complicated property market in the country, by far and away, possibly in the world. It's also the 9th largest in the world. And so we will speak about health a little bit too, but on the property side, it's important to see the dynamics in play where we are not a typical state when it comes to the ability to provide insurance products to our folks, and that we will continue to not be a typical state when it comes to our ability to gather and provide insurance to our folks. And so it's a good way of keeping in mind that Florida is just in many ways is a magical, wonderful place, but it's also just different, and that includes insurance.
Yeah, and we're stuck out here on a peninsula surrounded by water and Caribbean storms and everything else, so you've got your work cut out for you. This insurance, it really is a critical issue to the Florida economy, isn't it?
It absolutely is. It accounts for a tremendous amount of Florida's economic stability, but it also is the underpinning of any future growth that takes place in Florida. The reality is that in our world today, nothing is transported, built, renovated, and in many cases healed without insurance being involved in some aspect of that. So not just here, but in any state and any place in the world at this point, insurance is a vital component, and having access to insurance is a vital component of economic development.
Commissioner Yaworsky, thank you. We're looking forward to hearing your upcoming address and discussion on Florida's insurance market the decade ahead.
Thank you.
Now, here's Christopher Emanuel, Director of Government Relations at the University of Florida, with our formal introduction.
Good afternoon. It is an honor to introduce one of the finest public servants in the state of Florida. As you can see in the newsletter in front of you, Commissioner Yaworsky has spent his entire career in tackling some of the toughest issues in the public sector across multiple states, administrations, and branches of government. He has managed appointments and cabinet issues on behalf of governors, overseen the regulation of nearly every business and professional license in the state of Florida, advised legislators, and helped to start a completely new regulatory agency. But what you might not know from the bio before you is the type of leader Commissioner Yaworsky is. He is both competent and humble. He is thoughtful and decisive. It was no surprise that the Financial Services Commission, that is the governor and cabinet, looked to Mr. Yaworsky to lead the Office of Insurance Regulation this year, during one of the most challenging times facing the insurance industry and reinsurance markets. He has the perfect temperament and experience for this new role, and we, the citizens of the state of Florida, are lucky to have him there. Please give a warm welcome to our Insurance Commissioner, Michael Yaworsky.
It's such an honor to be here today, and at this point I think I've been introduced 3 or 4 times, so we may be able to wrap this up even quicker, but it's so kind for the words that have been spoken today. I think what I'm going to do today, as Chris and I talked about various things that we could talk about in the insurance space, one of the things that comes to the foremost of my mind is not only where we've been, but where we plan to go. But as I thought about it more, one of the most important aspects of understanding perhaps where these markets are going is somewhat understanding where they've been for the past several years. So a good part of this presentation will be about what the Florida market has experienced on both the life and health side, especially the health side, and the property market, where it's been for at least the past 7 years. And then we'll kind of go forward in a place of kind of some thoughts and observations of more likely outcomes of where we're going to find ourselves on both sides in the future. So with that, I'll give a quick overview of what the Office of Insurance Regulation does. Florida has a bifurcated regulatory structure over its insurance entities that operate in this state, and so that we share the regulation of insurance with the Chief Financial Officer, Jimmy Petronas, who handles mainly agent and agency services, consumer services, rehab and liquidation. I see Mike Dobson, who is both the CFO's general counsel and the head of the receivership office within Florida. He basically, whenever we get to a point with an insurer that we just cannot do anything more, we unfortunately send whatever is left to Mike to clean up the pieces. So thank you very much for doing that on a regular basis. But OIR itself, we handle licensure and market development of most insurance entities that are operating within the state of Florida. That is everything from insurers themselves to insurance-like entities to third-party administrators that operate within spaces, to things that are on some level. I know the surplus lines office is here. We have some oversight in some cases over those, but generally we oversee all those entities from a perspective of bringing them into the state, working with them to find compliance with what they're doing to operate in the state, and ultimately work to make sure that they stay in compliance, which leads us to another section, which is market regulation, which has gotten a lot of attention lately. That is a section of OIR that deals primarily with ensuring that companies are acting in compliance with the law. OIR has extensive authority to monitor the way that insurers are behaving in this market, the way that they're treating consumers throughout the state, and ensuring general compliance with all of our laws.
The reports, analysis, and data collection components, this is an area of OIR that has grown tremendously over the past several years. We brought in a lot of technology to understand what is taking place in this market and these markets, particularly on the property side, which has been a tremendous need to understand how things are impacting this market. Florida is now the only state in the country that on an annual basis collects data from every single admitted insurer in the state on the life cycle of every single property claim that has taken place, down to details from the open date, the close date, any vendors that were utilized during the course of that claim, any third-party adjusters that might be involved, lawyers that might be involved. And the goal is to gather information and understand trends that may be taking place within this market so that hopefully if there are problems that emerge, such as we've had over the course of the past several years, we'll be a little bit quicker to understand what's going on, figure out why it's going on, and hopefully address it either administratively or through future laws so that we don't find ourselves in a situation where there are trends that are taking place and we can't address them before they threaten the market as a whole. Financial oversight is just the ongoing compliance of our financial laws with the states, which is, I'm making that sound very simple, but it's insurance and insurance regulation is probably one of the more complicated areas of our economy, especially considering that it is an ongoing technical space where there's a lot of federal and state regulation involved. And finally, form and rate review, one thing that some folks aren't aware of, if you are purchasing an insurance product in Florida, you are purchasing a product that on the form and rate side in the admitted market that is approved by the Office of Insurance Regulation ultimately. So any form that you experience as a consumer or anyone sees it as a consumer, if it's being purchased from an admitted market carrier, which is in most cases, that form will have been vetted by the Office of Insurance Regulation, and any rates associated with that will have been approved by the Office of Insurance Regulation. Just a quick overview of the market. It's a massive industry in Florida. Florida has the 9th largest insurance market in the world at this point, and it is by far and away the most complicated. We have 4,833 entities operating in the state of Florida. That's not including agents or agencies, but it's including any entity that OIR regulates. The market as a whole, including everyone, accounts for 3.5% of Florida's GDP. And there are approximately, this includes agents and agents that are out there, 213.1 thousand employees in this sector. So I wanted to talk a little bit about the ACA. That's been a discussion over the years. It's primarily composed of two particular groups. One is shrinking, one is growing. The small group market is composed of employers that are purchasing products for their employees, and generally within the 50 to 100, or I'm sorry, underneath the 50 employee level. That market is shrinking right now in Florida. It's on a steady decline. Generally, people ask why that is. It's because of the individual market. What's happening is that individuals can generally get a better deal than any employee can gather through any bargaining techniques. Individuals are getting a much better deal, much better product at a much better price, often $0 or a very low monthly premium through the individual exchange at this point. And so that we see that market is exploding, with it now being the largest admitted ACA market in the country. And we see the small group slowly declining as a result of that. We'll skip that slide for time. This is a quick example of where this market has come over the years. When I first arrived at OIR as chief of staff, there were very few carriers throughout the state that were providing insurance products in every county. In fact, Florida Blue accounted for being the only provider in many of those states, in many of those counties. Today you see in the 2023 view a fantastic level of dark green. In Miami-Dade County alone, the size of Miami-Dade County, that market is larger than every single state but 4 as far as the number of people that are insured. It has over 13 plans in place for consumers to have options when it comes to their health care, and we continue to see tremendous growth. We expect it to be, the ACA individual market will be at over 2.6 million policyholders probably by the end of the year. And so it's been a great success story to see the ability for Florida to insure as many people as it has on the individual exchange, And sometimes one of the reasons I want to highlight this, because we talk so much about property, we often don't talk enough about health. Health has been a great success story in Florida for many years now. This is just a quick overview of what has taken place for 2023 in the health market. Enrollment has exploded, as I said earlier. These are the average statewide market rate changes that took place from 2022 to 2023, an overall increase of 6.7%, and we had 2 new enrollments in the marketplace. One thing that's important to mention as we talk about these rates that are taking place and changes that are being made, what the effective rate that OIR is ultimately approving is often not the rate that the consumer will experience, because so much of that is subsidized by the federal government. So the overall change to a consumer can be anywhere between $0 to a very de minimis amount. So you'll see most consumers will pay, of that 6.7% overall increase, will pay either a 0% change or a very, very minor amount. This is just another example of I think the earlier map was the group market. This is the individual market, as I spoke about earlier. You see the changes that took place between 2018 and 2023 in the various counties and the development that's taken place in this market over the years. So now I do want to talk a little bit. This is probably going to be the more interesting thing to many people, because I know we've all felt it in our pocketbooks. We've all seen the news about where we've been. So I'll talk briefly about the insurance market for property. Overall, there's 7.26 million policies roughly in effect in the state of Florida at this time. Approximately 84% of those policies are in the admitted market, as opposed to the surplus lines or citizens property insurance market. I know we've seen explosive growth over the past several years now in citizens, but it is still not making up the bulk of the market at this point. It's making up a significant amount, but not all of it. And I think one thing I wanted to highlight here is this is not atypical going back to Hurricane Andrew, where we've roughly had, this is a 4th insurance downturn cycle that we've experienced. This is probably the harshest. But if you can look back through time, and many may remember, following Andrew, which completely rocked the insurance industry on the property side for many, many years, in a way we've never fully recovered from that. Although the state has done many things to mitigate the circumstances around that, we've never fully recovered from the true impact of Hurricane Andrew. We saw another downturn around 2006, 2007, 2008 that took place following the crisscross, what I call the crisscross storms, which is Charlie and the others that blanketed the state in the summer of 2005, and we saw another downturn then. Each step along the way when we've had downturns, we've seen the state enact various changes that have taken place, all the way from the creation of the CAT fund to the integration of citizens going from a windstorm-only entity to a true property insurance company that is designed to absorb any residual effects of a marketplace that cannot take place, that the private market cannot handle. This is an example. A lot of people ask about the actual performance of insurance companies over the past several years during this decline. The numbers are true and very real. You see the net and gross income results of an aggregate chart of Florida's domestic property insurance market. Those losses are extreme and unsustainable. We have not been in a place where we can find sustainability within our market, and we see continued the moment, and we'll get into tort reform in a little bit, but at the moment, this is where we are, where there is simply not enough capital in the state to accommodate the losses that we've experienced. This is a quick chart of a loss reserve development over time. One of the things that's happened, to put it in easier terms, over the course of the past several years, is that despite many of the rate increases that have taken place, despite capital infusion that has taken place among various carriers, there is simply the best actuarial estimates of what an event would cost, what the cost of insurance would cost over the course of the past several years has simply not been enough to keep up with. So some cases we're hearing stories, and they're true, of some companies raising insurance rates as much as 70%, OIR approving those rates, 40%, OIR approving those rates. At the end of the day, in some of those cases, it has proven to simply not be enough capital raised through premium to cover the losses that are being experienced by those companies. So what is the state doing in this cycle to ensure that we can hopefully get a grip on this and move forward in a more positive way? Senate Bill 2D, which was in 2022, did many things and was a great first effort at increasing some additional controls around the state of the insurance market, adding transparency measures in, adding additional tools for OIR to collect data and understand what's going on better within the market, and began to tamp down on frivolous litigation that was taking place in our state. Senate Bill 2A, which passed in December of last year during special session, established a second, I should mention the first one established a RAP program, which is a reinsurance program to aid companies that were having difficulties. Senate Bill 2A passed what was called FORA, which was another mechanism to provide capital into the state. Those two programs combined have infused over $3 billion into Florida's property insurance market from the state to try and stabilize the situation. Additionally, 2A was the major thrust in the property space, particularly, that hopefully finally managed to gain significant control over the litigation problem that we have. When we talk about what was driving the adverse loss reserve development, what we mean in that, what that is essentially coming from is a combination of what we'll call social inflation or abusive litigation that was taking place, reinsurance costs that was acting off of that, and natural catastrophes that were taking place, and of course natural catastrophes that were occurring. Natural catastrophes drove a lot of this initially as we had more events after not having any sort of natural catastrophe event for almost a decade. We started with Hurricane Matthew a little bit, and then Irma, which was a major event, drove a huge spike in the amount of litigation that was taking place. A lot of reasons for that, but the one I always generally go to is the fact that up until the changes that took place in Senate Bill 2A, if there was litigation in any claim, and the ultimate settlement agreement or disposition of a jury trial or bench trial was that the claimant got more than $1 more than any initial settlement offer from an insurer, all attorney fees and expenses were paid for automatically as a matter of law. And so if the initial offer was a denied claim of $0 and somehow the claimant ended up with $1, all attorney fees associated with that claim were paid for. That changed with Senate Bill 2A. It removed that one-way attorney fee provision, and we're hoped, and I'm optimistic that over time that will increase some rationality in the litigation space. As Insurance Commissioner, I certainly do not want to be in a position where we are blocking access to litigation in instance of a genuine dispute between insurers of just either the matter of law or matter of fact. But it is important that there is rationality within that space to make sure that there are no perverse incentives operating in it to incentivize undue litigation. And then, of course, this past session, or that we're still in, House Bill 837 enacted several measures to change the way, further tamp down on one-way attorney fees, make some changes in fee multipliers, which is another component of attorney fee litigation, and did some major bad faith reform to ensure that that was being used in instances where it should be. I wanted to show this slide. This was one of the major, I think that a major point of data that changed the discussion around what was going on in Florida and litigation. It was data that OIR developed from what is called the NAIC, which is the National Association of Insurance Commissioners, Market Conduct Annual Statement data. This data is typically used by every state, most states, all but 2 states, to determine how an insurance company is handling its claims versus all other insurance companies, and what in a market conduct situation which is looking for enforcement action, you would use a tool to determine outliers and outlying behavior for companies that may not be acting in the best way. But as we looked through it, we found that we could determine a comparative of the amount of litigation and the amount of claims that were taking place in the property market in Florida versus all other states. And so as we looked at that, we found, and the numbers are pretty monumental. Starting in 2016, you see we had 7.75% of all property insurance claims in the nation. and we had 64.43% of all litigation on property claims in the state of Florida. The most recent data available shows 6.91% of all property claims in the state of Florida and 76% of all litigation. And so this was finally a tool that we could provide to the legislature and other policymakers to show that what is happening in Florida in the litigation environment is not a typical experience. We are in fact the outlier in this case by a lot. The next highest state had single-digit numbers of the amount of litigation occurring to account for the whole of the entire country. So looking ahead, where are we going with this? And I'll talk briefly about the property market, and then I'll just mention a couple of things that are interesting in the health market. The decade ahead. So Florida, it's important to keep in mind that Florida's market is unique among all the states for a number of reasons. Part of it's our history, part of it's our natural litigious environment, part of it is going to be our simple geography and our population density and where they're located. Our market is composed primarily of single state or regional insurance carriers at this point, not what you would see in most states where it's composed primarily of larger carriers that we see on the Super Bowl ads. So it's a bit of a different environment as from the get-go. And so I don't immediately think that is going to change in the near or long term based on a lot of factors. But what we're hoping to do, we also have the insurer accountability bill that's going through the legislature right now, which will hopefully add some tools to OIR's toolbox to make sure that we have a stable insurance market, is ensure that we have mid-size, smaller size insurance companies that are doing the best by their consumers, also running very financially sound operations under a new framework where they are not in a position where they are constantly on the defensive when it comes to paying claims due to excessive litigation. All of that is going to take some time to play out. Not every single story is going to be a success going forward. A lot of people are asking, as we speak now, legislature has just enacted all of these changes and done all this, and some articles describe it as a giveaway to the insurance industry. When are my rates going down? That is a very good question to ask. The answer is, unfortunately, more complicated. It took us many years to get to the rate level that we are at currently. It's going to take some time for the rates to reflect that. And if you look at actuarial science and what goes into rate making, what it essentially is taking readily available data of experience today in the recent past and transposing that information forward to make an actuarially sound estimate of what the costs are going to be for insurance in the future. Right now, we don't have data that is available to demonstrate what changes in the market these laws have caused. We're hopeful that in the near term we'll get that and be able to frame the discussion around rates into that space, but it's not here yet. It's going to take probably, the best number I've given is about 16 months before insurers will begin to be able to have experience that we can look at and be able to account for in any rate filing. And then at that point, those rates will be promulgated, and ultimately most insurance contracts in the state are on a 1-year cycle. And so it won't immediately mean that on month 16 a consumer will be renewed at a lower rate or a rate that's reflective of those changes. It could be as much as 11 months and 29 days. So it's going to take time for all these things to bake in before we can see any real changes. I just wanted to mention on the health side, and then I'll open it up to questions. There are some interesting things going on in the health space currently. We're seeing some changes taking place in that market that I think are noteworthy. One of them was a rule that CMS just released, an advisory, not a rule. They keep reminding me of that. But it's an advisory that all future health plans that are on the exchange going forward are limited to 4 particular plan options. And next year they plan on reducing that to 2 options. And the reason that Florida is a bit concerned about that as a federal exchange member is because that is reducing options for consumers to be particularly involved in making the best decisions for them on an individual basis. So we're having very active discussions with CMS in that, and we do see long-term impacts that are negative to this fantastic health market that we've built over the years, that are essentially limiting choice for consumers to take their options. What we've seen historically, and we're having some very vibrant discussions with our friends at CMS about this right now, what we've seen historically is, take Miami-Dade County, for example. When you have more options in the health space, we've seen tremendous growth around that for all sorts of reasons. Everything from, if a new plan is operating in an area with many options, they're out there trying to market their own plans as well, and it just generates economic energy around getting more and more people insured by health providers. So that's an interesting thing taking place, and I would just also mention there's a bit of a transformation that's underway within the health industry overall, where we're seeing, and actually Fred and I have talked about this various points. We're seeing this development of, around our major health carriers in the United States, massive holding company systems that are doing more and more than just insurance. If you've seen anything taking place this past session in the legislature, there's another important bill that's going through this session that relates to allowing Florida OIR and ACA primarily the ability to regulate PBMs in the PBM space. If you've never heard of a PBM, it's called a pharmacy benefit manager, and you may have noticed it on your health care card in recent years. You have, along with your insurance carrier, you have a PBM. The natural good thing that a PBM is designed to do, and why they were originally developed, is to ensure that there is a group-wide volume of policyholders in place, so that the health carriers can adequately have the bargaining power when they're negotiating with distributors and ultimately manufacturers of various pharmaceuticals, to ensure that there's adequate buying power in place to negotiate prices down. We agree with that. OIR agrees with that, but we also want to make sure that that space is adequately regulated. It's a part of an insurance company holding system, that there's an adequate transparency in that space, and that it is not just a boon for capital to be gained in one area that's technically outside of the insurance space. So we're working closely with everyone on that legislation as we go forward. So with that, I'll just open it up to questions.
So before we take questions, I just want to remind everyone that we invite club members only to ask questions, and the microphone that she's working on is back there.
Okay, I'm a retiree of a member of the Florida Retirement System, and I get my Medicare Advantage through them. I'm aware of the fact that I could get an individual policy for a fraction of what I pay through my former employer. The only reason why I'm staying where I am is because I think one of these days the individual market may disappear. They may say they don't want these old sick people. Is my concern justified? Should I drop? Because if I drop it, I can never get it back.
Yeah.
So,
thank you for the question. It's really tough to give individual advice, but I would say that generally speaking, we are seeing changes that are taking place within the exchange marketplace, which dominates the individual space that are interesting, and that, again, the idea of reducing the number of plan options is a factor of maybe, although that's not the stated intent, could be an indication of trying to create uniformity in the health, at a minimum, in the healthcare space and exchange space, and also limiting options that take place. I would also just note that this was not on the individual market, this was on the small group market, but a major national insurer just recently announced that they were pulling out of Florida's small group market, and the reasons that they cited were not the slow decline of the business necessarily in Florida, but were a national business decision wherein they chose to switch their business focus away from individual insurance and towards being more like a third-party administrator or provider for federal programs that currently exist. So it's possible that over time, again, as we talk about changes that are taking place within these holding company systems of major insurers, that we'll see this kind of gradual, although they're different companies, uniformity begin to take place in the space at a minimum, and an increased reliance on uniform programs coming
that are funded through or because of the federal government. I'm not sure if that's entirely helpful, but I think the bottom line is someone once said there's nothing with a longer lifespan than a federal program, but there's also, they change. And so all these individual programs are now heavily guided by the federal government and could be subject to change over time, if that's helpful. So I can't give you a yes or no, but
What are you going to do when you retire?
I don't know. I've yet to think about retirement, so we'll see. That's probably bad. That's bad on my part.
Thank you, Commissioner, for your comments this morning. I had the privilege of serving on the Hurricane Cat Fund when Commissioner Bill Nelson appointed me for the first 8 years of it. So could you share with us a little bit about what this financial condition is now? Do we have enough money to cover for more than one storm? I assume we're probably at 2 storms or so. And then how has this impacted some of the baby windstorm insurance companies, many of which have gone belly up?
That's a great question. The CAT Fund's financial position is in a good, solid position, as it has been for many years. The other good news that I think Florida has at the moment is if something happened that would truly, and I'm not saying this would happen immediately, but Florida currently has the financial capacity within its budgets to address any truly catastrophic crisis level events that took place within the CAT Fund. So we're in good place there. We're on a great financial footing with our rating overall, and we have good leverage capacity to do what is necessary to protect the market as a whole in that regard. One thing that's interesting about the CAT Fund that's taken place in recent years, it's done its job. The mechanics have been very good around ensuring adequate reinsurance in most places. But there is what's happened to the overall reinsurance market as a result of the existence of the CAT Fund is that it's kind of bifurcated the reinsurance industry, and that it's extremely cost efficient for almost all of our carriers to, I wouldn't say cost efficient, it's affordable for all of our carriers, even the ones that are in more of a difficult financial situation currently, to buy coverage above the CAT Fund. It's become increasingly difficult to purchase reinsurance below what the CAT Fund covers. And so we're seeing that market effect take place. We're in this silly season of reinsurance buying right now. Actually, a few weeks ago, we spoke to 109 representatives of reinsurers, just talking about some of the changes that have taken place, asking them, as nice as you can ask a reinsurer to cover certain things, and providing intel about what Florida has done in the tort reform space, which everyone has advocated for. But the CAT Fund is in a fairly good position at the moment.
So I was listening to your comments about the small groups going away in favor of individuals. I have a small business, but unfortunately, all of us are related by blood, and all my employees are related by blood. I can't get a small group plan because of that. So, I mean, my question is why, and then I'm sure most small businesses are like that, and they're actually being forced out of those plans to individual plans, which for us are much more expensive than a group plan.
That's a great question, and I'll research that as to why the small group excludes family members. I'm actually curious about that myself. I wasn't immediately aware of that. So I'd love to get your card at the end, and once I have an answer, I'll follow up with you.
Commissioner, thank you for coming. I'm obviously an insurance agent when I spoke earlier, but I also want to disclose that I'm on the board of directors for the Florida Association of Insurance Agents as well. So your predecessor was focused on us keeping insurance companies whole and in business and not going into receivership. Obviously, that's still a concern. We, as agents, are dealing with rate increases. Also, we're fully aware of the claim challenges that are going on. So we understand both sides. And so the question is kind of multifaceted, but it breaks down to what your philosophy is going forward in terms of maybe holding some of the companies accountable, even though we're concerned about stability, really looking at some national carriers who have raised rates, whereas we know there's some other national carriers who are trying to do mass non-renewals, and there's not really anyone there to absorb those non-renewals other than maybe citizens, putting further stress on the market, as well as now all the laws that have passed. There's money supposedly on the sidelines is your focus going to be clearly balanced, but also going out and recruiting and trying to, just like you said on the reinsurance side, bringing back in some competition so that maybe we can return stability for Floridians? Thank you.
Absolutely. So my general philosophy is that I reject the idea that we cannot have well-capitalized, smaller or mid-sized insurance companies in the state that are also doing a good job handling claims. And I want to say that there are a lot of companies that we have in the state of Florida that have ridden this very difficult period extraordinarily well. Despite the losses, they've infused capital where they've had. They've saved capital for a rainy day that they could infuse capital. They've kept their rate-making promulgation in a place that's very actuarially sound, and have done a great job and maintained as many policyholders as they can. And at the same time, they've also done a very good job with claims handling. There are a lot of very good domestic property insurers in the state of Florida. They're not always the ones that get the news. Sometimes they are, but I think you got to look at this past 7 years from the perspective of insurance companies continuing to be litigated in a manner that was so excessive that they hardened up their experience in the way they treated every claim that came in, to a point where it probably was detrimental to policyholders. And at the same time, there was a struggle for survival going on, which everyone had to recognize, because everyone had to have a marketplace. That immediate effect has not gone away. It's a very difficult tightrope to walk, but we need to have insurers at the end of the day that are both financially sound and providing good service to customers. There are many that are doing that today. So my philosophy going forward is very similar to the former commissioners as well, that we will do every single thing that we legally can to try and keep an insurer in this marketplace, providing service for their customers, making sure that they're paying claims when they're due. And it's going to be a very difficult time for a little bit longer before we can get to a place, hopefully, where we're past a lot of the past 7 years, if that's helpful.
Hey, Commissioner. I have a question for you.
Sure.
So I got my Medicare card out. It's interesting when you get old, and you're asked for it. And they ask you for, they refer to most of your things as Part B. Well, the hospital's Part A, I guess, but why Part B? Why isn't it A in hospital B? Because most of the time, your medical things in life are going to be associated with your A-type stuff. Then following up on that, why do they call my insurance that I pay for, my general insurance, health insurance, why do they not call that my supplemental insurance? And instead really kind of refer to sort of supplemental lines as your or surplus lines as your supplemental. It's confusing jargon to both people.
And before you answer, that's our last question.
Okay. Thank you for the question. You know, I would first refer you either to Michael Dobson with the Division of Consumer Services at DFS or the federal government, and they're usually pretty responsive. So, you know, that's a good question. I think that at least partially the Part A, Part B, Part D are, and this is just me going off the cuff, but I seem to recall that they are related to the iterations of which the various additions to the program have been passed. So various coverages come on. Part D involves prescription coverage, which I think passed in 2002 or 2003, if I remember correctly. So I think that's the simple answer. I just did my taxes right, you know, as typical right before it was due, and you know, they haven't simplified that at all. So I don't know if there's relief coming in this space, but I seriously would anybody, and please share this, anybody who has questions about coverages or anything like that, Chief Financial Officer's Division of Consumer Services does do a great job answering questions like this, and Michael, I'm sure, will be in the corner with anyone who has questions, and giving off the Consumer Services number. So with that, I really want to thank you. I hope this was helpful and informative. I was a bit I was a bit scared that I followed the great General Patriots following this, which I'm sure was fascinating. And so I hope this is, insurance controls everything about our lives one way or another, whether we realize it or not. I was seeing Elon Musk's rocket go into space today and disintegrate, and my personal first question was, I wonder who insured that. So, we'll see. It's everywhere you look. So thank you so much. I appreciate it.
You've been listening to Florida Insurance Commissioner Michael Yaworsky speaking before the Economic Club of Florida on April 20th, 2023 in Tallahassee, Florida. For more information on the Florida Office of Insurance Regulation, visit floir.com. The Economic Club of Florida promotes interest and enlightenment on important economic, political, and social issues of the day. To learn more, including how to become a member, visit our website at economic-club.com. This program was recorded at the Champions Club at Florida State University in Tallahassee, Florida.